Hello, everyone. To another KE Report webinar. In this webinar, I am featuring IsoEnergy. I have on the screen with me here Craig Parry, President and CEO of IsoEnergy. IsoEnergy is traded on the TSX Venture Exchange under the symbol ISO and on the OTCQX under the symbol ISENF. Now, just a couple quick housekeeping items here. Everybody who is tuning in, you should see a chat tab and a questions tab either to the right or at the bottom of your screen. Please use the questions tab to send me any questions that you have. I will be sure to integrate those throughout the presentation that Craig is going to give, or at the end of the presentation, depending on how they best fit in. This chat tab is public to everybody, so if you want to share some thoughts with the other people attending, feel free to do that. Again, I will be monitoring this questions tab a little bit closer. I think a lot of people, or I assume a lot of you, do have a good understanding of IsoEnergy. I'm excited to chat with Craig here because, well, the uranium market's doing better and the company is continuing to drill out a new uranium discovery in the Athabasca Basin. In full disclosure, I am a shareholder of IsoEnergy. I want to get that out of the way. But Craig, I'm going to throw it over to you now. Let's start with the presentation. As I said, I will mix in some questions here and there.
Yeah, hi Corey. Thank you for having us on. Always a pleasure to be speaking with you. This time for camera. Hopefully we don't have any technical issues here, but we'll see how we go. So I'll just share our corporate presentation with everyone now, and thank you all for joining us. It's been a pretty exciting and interesting in the uranium space, of course, in the past 3 or 4 weeks. It's an ill wind that brings no good, and in our particular case, COVID-19, terrible for humanity. But oddly enough, it's translated to something of a bull market in uranium. So it's been an interesting month. We've been incredibly busy. Against that backdrop, we've been putting out some fantastic drill results. But before we get into that, I'll just touch a little bit more about what we're seeing in the uranium market. And, Corey, if I drop out here, please let me know. I know we're having some trouble with the mic. So look, that slide there sums it up, and the pie chart on the top right-hand side of the screen there really sums up where we're at the moment. Of course, we operate in a market that is fundamentally challenged on the supply side. There's 441 operating nuclear reactors worldwide today. There are 56 being built as we speak. And those 441 operating reactors, the fuel that fuels those reactors is supplied by more or less 12 major mines around the world. They supply nearly 90% of global supply. So there's an imbalance between the supply and demand fundamentally. And if anything happens on the supply side, we end up with an interesting situation. Of course, globally, up until 3 or 4 weeks ago, our uranium market, 194 million pounds per annum. Demand has continued on through this pandemic at the same rate, so we haven't seen any material drop-off in demand. But production, prior to COVID-19 and these restrictions we're in now, we saw production of about 120 million pounds a year against demand of 194 million pounds. What we've seen today is the closure of nearly half of that existing production. So now the market was in fundamental undersupply, now it's in dramatic undersupply. And of course, the threat of those closures, if you like, is what's driven up the uranium price, best performing commodity this year. Apart from coffee, we've seen the uranium price run from $23.50 a pound to $33.50 a day. So we're in serious bull market territory. Just on the announcement of those closures, I don't think we've seen all the product that will be removed from the market dry up just yet, but when that happens over the next couple of weeks, we expect prices to run on strongly. So against that backdrop, we've been drilling our high-grade Hurricane discovery. We're very pleased with the results of our winter program. We've put out our best drill holes to date. Some truly spectacular intersections there at Hurricane in the northern Athabasca. And you can see there, hole LE2034, the core box, all of that beautiful high-grade uranium mineralisation in there, pitch blende mineralisation, 8 metres thick, grading 34% uranium. To put that in gold equivalent terms, that's about 320 grams per tonne gold equivalent, or 10 ounces per tonne. So extraordinarily high grade. You know, more of what the Athabasca is famous for. And you can see the best drill holes that we've put out. We've had some absolutely, you know, the winter program has been spectacular for us. We've been very excited by the results we've got, and you can see all of those very good results there on the right-hand side of the screen. So I guess what we've done over the last few months is confirm that Hurricane is a large standalone deposit that has very, very high grade. So we're ecstatic with how that is all shaping up and how that program's gone.
Craig, can you just make a quick comment too on when you guys actually started drilling this deposit? Because this is a relatively new discovery still.
It is, yeah. Look, absolutely. It's the latest high grade discovery, first major, you know, significant high grade discovery in the Athabasca Basin. Really, since our parent company, our major shareholder, NextGen, discovered their Arrow deposit. Arrow, of course, discovered in 2013, and then we went on to discover Hurricane in 2018. The deal there that we did, Corey, we acquired that property from Cameco in May 2018 for $300,000 worth of stock and $20,000 in cash. Steve Blower, our VP of Exploration, had a drill rig on the ground out there 6 weeks later, and 2 weeks after that we announced the discovery. We only drilled one hole in that campaign. That's all we sort of had budgeted and planned for that time, and we weren't expecting you know, the high grade hit that we got in that hole. So we stepped away. We then went and raised some more money and got back out there in the winter of 2019. So we've really only had 2 winter and 1 summer campaign of any significance. We've now drilled 53 holes, and we're really still at that exploration stage. We haven't defined the perimeters, the extents of that deposit just yet. So still plenty more to do there. But you know, to remind everyone here who we are and what we're about, we're a spin out of NextGen Energy. Of course, we've got a number of board members in common. I was a co-founder of NextGen with our chairman, Lee Courier, who's the CEO of NextGen, of course. So we have very strong links, and of course, NextGen's been an incredibly supportive shareholder. They're very happy with the results we're getting, and they've contributed over $6 million in capital in the last few raises that we've done. So we enjoy that full support. But apart from that, internally ourselves, ISO has a very strong technical team led by Steve, who was the head of exploration for Denison. He led that Denison team to discover the Griffin deposit, and now he's come across to help start IsoEnergy and made another significant discovery. So Steve's got a fantastic track record, as does the broader group, including the guys at NextGen. I think, you know, over the next year or so, we'll have proven ourselves to prove up more pounds than just about any other team that's operated in the Athabasca in the past 20 years or so. Timing, absolutely perfect time to be looking at uranium investments. I think, you know, we saw a drop in share price there pretty dramatically in the last, you know, couple of weeks ago. We're coming back now. Good prices have started to rise. We think they've got a long way to go. So now's the right time, and we're simply leveraging our strengths. Of course, we've got, thanks to that NextGen success, we've got capacity to raise money. We've been successful at doing that and getting in and exploring, and being able to raise money and work during this downturn we've been through has been all important, because we've been able to do deals very cheaply, put our foot on a big chunk of that eastern Athabasca, and get in and explore. Just looking at the map there, and Corey, hopefully you can still hear me there.
Yeah, you're coming through loud and clear here, Craig. Everything looks good. Fantastic,
thank you. So you know, the map on the left-hand side of the screen there, I'll remind everyone that's the eastern half of the Athabasca Basin. This tan area.
Craig, we've lost some of your audio, unfortunately. Just faded out. 1 second. Sorry for the technical difficulties, everybody. 1 second as Craig fires back up. We were trying to sort this stuff out
Yeah,
before, but unfortunately, yeah, there you go, Craig.
we're back now. Okay,
Yes,
so
you need to share the presentation again, please.
let me do that.
Back to slide 6.
There we are. Share that. So hopefully you can see that now there, Corey.
It is up, yes.
Slide 6. Where was I? So talking about that area there, and that 120 kilometre by 50 kilometre zone is the home to the largest uranium mines in the world. Of course, McArthur River and Cigar Lake, massive mines, and all of the infrastructure in there. And of course, very importantly, you've got Key Lake Mill, McLean Lake Mill, Rabbit Lake Mill, and all of those big deposits in that area. Of course, you know, our Thorburn Lake property there, right next door to Cigar Lake, only 6 kilometres away from it, along strike of Cigar Lake. And then sitting up here, these orange polygons are, of course, our property position. We inherited a modest number of 5 properties off NextGen when we did that deal to start ISO, and we've now built strongly on our portfolio of properties out there, with the idea that we'll follow up past drill holes that have never been followed up, and we'll also get in and explore under the unconformity for Arrow-style deposits. And there you have it, the Hurricane property, Larocque's property, and our Hurricane deposit sitting up there. So just zooming into that area, a couple of key things that you should note here. Points North's a major centre for distribution in that area. McLean Lake Mill is only 40 kilometres away from that Hurricane discovery. And McLean Lake Mill is, the biggest and most important mill in this part of the Athabasca. That mill at the moment has capacity for 24 million pounds a year. Currently seeing about 18 million pounds going through it, although it's been put on care and maintenance due to COVID-19, of course. Come 2025, depending on what happens with Cigar Lake, it may run out of mill feed. So having a deposit within 40 kilometres of that mill is going to be very important, and offers a number of opportunities. So great place to be located. You can see, the broader property there and where the Hurricane zone sits. Now, just zooming in, I won't delve too deeply into the geology, but of course we've now defined a 600-metre long zone of mineralisation running from east to west. Our recent high-grade hits are over here on the western flank of the deposit as it stands. What we've defined there is really a 600-metre long by 40-metre wide by 8 to 11-metre thick zone of high-grade mineralisation. The setup there is not too dissimilar to Cigar Lake or Denison's Phoenix, for example. It's an unconformity-related deposit of similar dimensions. We haven't, very importantly, you'll note that there's some very high-grade hits on the southern margin here, and we haven't closed those off. And you'll see that on the next slide when we come to it. So looking at these cross sections, these sections are looking from the western part of the property and the property boundary towards the east. You can see there 2 of our highest grade hits, that hole 32, we intersected 8.5 metres at 34%, and we haven't closed that off to the north. And then on the southern margin, you'll see again 23% over 7.5 metres. We haven't closed that off yet either. And then you'll notice these big structures that run into the basement. Now, we've sunk these holes down through the basement looking for arrow-type deposits. Of course, this is an unconformity-related deposit that sits at the interface between the basement rocks and these tan sandstone units. And you'll note here these big offsets in the basement. Now, that's something that you see at only the biggest of deposits. And Cigar Lake carries that structure, if you like, as well. And you'll note here we haven't high-grade zones typically sit right at where you've got those biggest structural offsets in the basement. And so here we haven't had a drill hole go through that zone yet. That's one of the things we'll be doing come our summer. We expect to be doing a significant drill program in summer and looking to close off some of these sections. So my expectation is that we'll be delivering some results from those sorts of zones as we get back out there in the summer. And some of those results, given we'll be drilling in and around these holes, could be quite spectacular. So, we're excited to get back out there, and we're working on those protocols. Of course, with COVID-19 about, the safety of our people, stakeholders, and the communities we operate is all important. And so being able to make sure that we can get out there safely and operate without risking infection of anyone in those communities is crucial. But we think we can do that. We've now put in place some protocols that allow us to get back out there in summer, so we're looking forward to that. I should point out there are some truly spectacular intercepts in there, 2 metres at 23% U3O8, some of the highest grade, highest value rock on the planet, and highest grade mineralisation on the planet. Another section there, simply an example again of a high grade section that we haven't closed off yet. So we've got to do all of that work. I think, our expectation is we probably need 2 more drill campaigns before we announce a maiden resource sometime next year. So that's what we're working towards there. And then
let me jump in there quickly, because there was a question that came in. How many more holes will be needed or will be needed to drill before we see a resource calculation? So you're thinking 2 more drill programs. Does this include summer of this year and winter of this year? Are those the 2 programs you think need to be undertaken?
Look, that's right, Corey. I'd love to be able to give a definitive answer. If the deposit keeps getting bigger, then we'll have a lot more drilling to do. I mean, it may take more than that, but at this stage, based on what we're seeing, we think at least 1 more, if not 2 more campaigns. Probably we've drilled 53 holes to date, and getting those holes up to around 100 would give us an optimal number to understand, the extent of the ore body. Of course, if you look at NextGen and what we had there, Arrow just kept getting bigger and turned into a truly tier 1 monstrous size deposit. And I'd love to have that problem, but I think we'll be well positioned sometime next year, probably first half of next year, to announce a maiden resource. So we're well positioned there. And in a similar vein, Corey, we've got that resource delineation. We've still got exploration drilling to do around Hurricane to close it off, and you'll see there's big gaps in our drilling like this out to the east, and we need, you could hide another high grade pod of mineralisation in there easily, so we've got to close that off as well. And then you'll note, so here, this is the property boundary here, and then heading east, we've got this big conductive trend that attracted us to the property in the first place. Cameco had some near-miss holes out here. We've followed up with a couple of holes, 6 holes in this program just completed. And some of those holes hit some very interesting alteration, highly altered basement structures and elevated radioactivity. And any one of those holes could be tantamount to a discovery hole, if you like, or a near-miss. And you'll see that the resistivity in this area increases greatly, suggesting there's big graphitic structures through there. We see that in some of the drilling. So we're very enthusiastic about getting out there and continuing along strike. And of course, we do know that this Larocque East trend, which extends from Cameco's Larocque deposit to the southwest, their Larocque North deposit, now our Hurricane deposit, and then further east, these conductors typically are like a string of pearls, if you like, for a bad analogy. And so, there's a high probability that there will be other pods of mineralisation along there. So we're keen to get on and test that further as well. So whilst Hurricane, great deposit, I think one day will be a standalone mine based on what we've seen. Stepping out there, we could find other things as well. So the exploration potential is significant. A little bit about
keep on talking about the drill programs, because there was another question that came in regarding summer drill programs. What is the summer drill program?
Yeah, look, we're working through that at the moment. We're going through our budgeting and planning process as we speak. We'll have a board meeting next week to sign off on all of that. My expectation is that we'll probably launch a look. If we didn't have these current COVID-19 related challenges, then we'd probably have 4 drill rigs out there going around the clock in early summer, and really getting to that point where we've proven up a resource as quickly as we can. Unfortunately, because of COVID-19, we don't have that luxury. We're probably going to have to push the program back to the back part of summer. July or thereabouts, and that will give us a limited window as to how many holes we can do. But what I'd like to think we'd do was a 20 to 25 hole program, of the order of 10,000 metres. So a $2 million program thereabouts, similar to what we did over winter. And I guess, that will get us a good way to understanding the dimensions of the deposit and an initial resource. That's the key point. We'll also take some early steps, I think, to do some metallurgical test work and start gathering baseline environmental data during that program as well, so that we can optimise a path to production when it comes to that. But that's a serious forward-looking statement. We've got quite a bit of work to do before we think about developing a mine out there. That said, worth just pointing out, of course, that in the last few years, Cigar Lake, of course, very high cost mining operation, both in terms of operating and capital cost. But in recent years, we've seen the advent of Denison championing a process for in situ leach technology for these types of deposits. And Orano, who own that McLean Lake mill, have their SABRE technology, which is an acronym for Surface Access Borehole Resource Extraction, which is a long way of saying they have of mining the deposit through a borehole, a reverse circulation type borehole. So there's a number of lower cost options to developing a project like this available to us today, and we'll be looking at all those as we go forward. This next slide, the sort of schematic cross section of where we sit. Of course, you've got next.
Greg, unfortunately, we lost your sound again. Sorry about this. One of the, I guess, challenges of everybody working from home here is trying to deal with this technology. We went through a couple practice runs here, but unfortunately, this computer seems to be automatically muting Craig at certain points. But he'll be back on here, and we will be back to this slide 12. Craig, we have you back now. Yeah, we can hear you.
Must be trying to tell me to shut up. I'm going a bit over
time. We're moving through it. We have some questions to come into that we'll address here soon. Keep them coming, everybody.
Okay, good. All right, let me just bring that back up. There's a schematic cross-section, of course. I mentioned Arrow over here. You can see a number of other deposits. Ours is sitting down at a relatively shallow 325 metres hurricane. And then you've got those deposits like Cigar Lake, River sitting down here at a bit depth. So, we're in a very good position for an unconformity-related deposit. Very importantly, we're not below a body of water either, so relatively more straightforward to develop a project in those sorts of conditions. And then look, Corey, one of the last slides here, just going back to the corporate side of things. To my mind, the most important thing here is that pie chart of our shareholder, our major shareholders' ownership there. And NextGen, of course, sits there with 52% of the company. Lee Courier, our chairman, is the CEO of NextGen. I can tell you confidently that they're very excited by the results we're getting. And Lee, of course, has an objective to build a major uranium mining company, and so having a portfolio of projects that help him get there is all important. So, and hence NextGen's been an incredibly supportive shareholder, contributing significantly in all of the last couple of capital raisings. So that sets us up sort of uniquely there. But of course, we've got Orano or Areva there as a significant shareholder, and Cameco as well. And I think, they're happy that their shareholders, they've got a toehold in the latest, greatest discovery, high-grade discovery in the basin. And then we're very fortunate to have a number of major shareholders like CQS out of London, Brian Lax at Old West in Los Angeles. We had a call with him this morning. He tells us he now has 7% of the company that's been buying on market. The guys from Segra out of New York and Texas, thought leaders in the space. So we enjoy their great support, and I think they're sticky shareholders. They're going to be there with us for a long time. Now we're delivering for them. And that means our free float, very, very modest amount of free float, perhaps 23% of the company. There's a lot of talk in our share structure, if you like. We've only got 84 million shares out. We've got $3.5 million in cash. We raised $7 million in a financing December. We don't need to come back to the market this year. That's plenty of money for the program that we've got planned for summer and all the way through into the new year. So our message to investors is, if you like what you see, buy on market, because we're not planning on coming back to the market at all this year. And if we do, we've got NextGen there wanting to own more of us, not less, as well. So we're in an incredibly fortunate position. And I suppose the share price chart there points to the fact that it's not too late to get set. Whilst we, some very cheap stock back there about a month ago in the dim, dark days of this pandemic. We've bounced back strongly, but we're still really relatively flat on a 52-week basis. So those huge results that we've put out have not really been factored into our share price in a material way. So to my mind, still early days and not too late to get some very, very cheap stock out there.
So, Craig, in terms of institutional shareholders, we had another question come in that was just asking, first and foremost, has the institutional ownership here increased recently? And what are some of the talks that you've been having with large institutional investors?
Yeah, really good question. Very, very good. And I think, I'm not speaking out of school here. We've had a number of banks offer us bought deal financings in the past couple of weeks. There's clearly a lot of money coming into the sector. People are very keen to get positioned. We've had offers of financing from banks and individual institutions. What we're hearing from some of our advisors and bankers is that, particularly out of the US, a lot of generalist funds are showing interest again in uranium. And of course, it's such a tiny sector. Doug Casey likes to talk about this, that when money comes from generalist funds in the US and globally into the resources sector, it's like trying to squeeze the volume of the Hoover Dam through a downpipe. But when it comes into the uranium sector, it's like trying to get it through a drinking straw. And I can see those conditions emerging. We've seen a good, strong bounce in share price. I can tell people that, I've been on the phone from 6 or 7 a.m. every day till about midnight every night in the past week, talking to, firstly, guys in Europe, then across North America, and lastly in Australia. And so, it's a very interesting time. And it's a very good question. I guess it confirms that interest is really starting to build. So we're at the thin end of the wedge here. I think if we see uranium prices as that supply side dries up over the next couple of weeks to months, we could see our uranium prices run very strongly, and all of those institutions pile into the sector. So, we're set up for a very exciting time. Do I think it's going to be like 2006-07 with uranium going to $150? Don't know. Certainly we don't. We know that the utilities globally, and particularly in the US, have been complacent. They've been able to get all the product that they've ever wanted out of the spot market cheaply over the last 3 or 4 years, so they've been complacent. If they start seeing that they can't get that material and can't get contracted material over the next couple of months, well, who knows? I think we'll see much higher prices. Certainly we know that Cameco and Kazatomprom and some of the other major producers want to see a 5 in front of their contracts, so they're looking for a minimum of $50 for longer term contracts. So I think, I think what those guys are doing is playing a commercial game of, right, let's make sure we get the price up to those levels so we can have a more serious conversation then with those customers. So I really do expect that we'll see a $50 or $60 uranium price in the not too distant future. But does buyer panic set in like it did in 2007, and we see prices punch on through that? We do know that our industries, the mining resources sector is a cyclical business, and prices tend to overshoot on the upside and the downside. So we're well set up for an interesting few months ahead. So look, that's it. I won't talk anything about the team. I'll just give a shout out to Andy Carmichael, our senior geologist. Steve, of course, leads the team, but Andy's now involved with his second major discovery and does a tremendous job leading the team in the field. The board there, they'll be familiar to some of you. Chris Lee, myself, started NextGen back in with Andy Brown back in 2011-12, and Those directors have a strong track record in uranium exploration and development, and we enjoy their full support. So we've got a great team across the group. And then, so Corey, look, that's really it. I guess what we're trying.
Craig, it sounds like that phone knocked your sound out again, unfortunately. If you could just reconnect here, and then we'll go over a few of these questions that we still have to address, a few more dealing with the overall dimensions of the resource, as well as a couple more questions on uranium. So I'll just wait for you to reconnect here, Craig. We have you back. Craig, unfortunately for you. Oh, sorry about this, everybody. As I mentioned, these issues, but there just seems to be something with this connection.
Yeah, how's that now?
There we go. Now we can hear you. Thank you for that, Craig.
It seems to drop out. Look, so sorry, I was just wrapping up there, but I just wanted to say that you know what we want to be seen as to name for uranium exploration. Of course, NextGen stands out head and shoulders above the others as the go-to name for a tier one development project. And baby NextGen here wants to be seen as the go-to name for an exploration project, albeit that we intend to move that project very quickly through beyond the exploration stage and through permitting and on into development. And I think, you know, I suspect that's one of the questions from one of the viewers is what's our plan for the deposit? Whenever we've started a company, we've always taken the view that we're going to develop the thing and move on into production. And we take that same view here. And I think we've learned a lot from the NextGen experience in recent times. I've got a track record of development as well as exploration as well. And so we know, you know, we know some of the nuances in this, and hence, even at this early stage, we're starting to gather data that will feed into permitting and development of the project. So we're thinking about all of those things now, albeit that it's still early days. We've got to get declare a maiden resource before we go through all of that. So, you know, it's an exciting time. I think people should take away from this that we'll be drilling summer. We'll be putting out some more results from in and around those high-grade hits that we've had. And we're well funded, so don't expect us to come back to the market at any time soon. And keep a close eye on what we're doing. You know, we've got a lot going on and a lot of good news to come.
All right, Greg, thank you. Let's get into some of these questions. One, dealing with exit strategy here. It ties in with your recent comments regarding NextGen. NextGen is such a major shareholder that could they be a takeover candidate for IsoEnergy here? Or do they have any sort of back-in rights or any sort of ability to come into another offer and either match it or increase it?
No, look, they okay. So really, yeah, good question, probing question, if you like. You know, our intention, our approach here is I'll state again, is to move the project forward ourselves under our own steam and guidance and develop a project. That's always been our intent. If someone wants to come along and put a big offer on the table, then we'll look at it at the time. I've mentioned some of those sorts of synergies with you know, McLean Lake Mill, for example, the fact that we're right next door to Cameco and Orano's Dawn Lake joint venture. So there's a few things there that I think would make a deposit of this nature very attractive to an acquirer in this part of the world. Of course, we're not far away from Rio Tinto's Rough Rider project, and of course, you know, that project hasn't stacked up for Rio Tinto. A little bit small for them, but you know, Rio Tinto paid $600 million for that back in 2012. So, you know, that's where we'd start as an asking price. And then in terms of NextGen and NextGen's intentions, you know, we've been very clear there. I stepped off the board of NextGen last year to really focus on what we're doing here. Of course, you know, we also brought Brad Wall onto the board of NextGen at that time, and Brad's a tremendous asset to all of us and to NextGen and the broader group. So, you know, we're putting in place those building blocks to be a long-term operator in Saskatchewan. I think, you know, NextGen Lee's intention absolutely is to build a serious diversified producer, and a deposit of hurricanes, you know, potential size and grade should be of interest and is. And so, you know, NextGen certainly has no preferential right to the deposit or the stock. But suffice to say, very good to have a shareholder, a major shareholder of that scale, there supporting us.
Okay, let's just quickly recap the overall dimensions you have so far for this hurricane deposit in terms of strike length. And from that, is there any way you can project? I know this is another kind of prodding question here, just how many pounds of uranium there could be?
Yeah, look, so the dimensions at the moment, and we have to caveat this by saying we haven't closed it off in any dimension, other than we're starting to get towards the property boundary in the west. It hasn't been closed off to the east, and most of those sections, bar one, are still completely open. So we don't know how big it could get. It's certainly a deposit of serious scale and extraordinary grade, but far too early to say. And we won't, you can't really give guidance around what the resource might be. We'll have some internal numbers shortly, of course, but a lot more work to do. And we've got a lot of infill drilling to do as well. So a lot more work before we determine it. But it's a significant high-grade deposit, that's for sure.
Okay. Now, in terms of the overall uranium market, yes, there is a huge supply cut that just went through a lot of these mines, temporarily suspended. How does that filter down to exploration companies, understanding that you guys aren't coming into production anytime soon, but in terms of majors then looking to replenish resources that right now they're stuck not mining?
Yeah, look, that's a really good question. I suppose if you look around the world at what the majors are doing is probably the best way to look at that and answer that. I guess we've seen, Cameco come under some serious financial pressure in recent years. They've cut their exploration budget significantly. But you look at someone like Orano have a very significant exploration budget for the basin and globally. And I think, part of their motivation is to look for feed for those mills, that particularly that McLean Lake mill that they own. So they've been pretty active. But generally, exploration budgets have been decimated in recent years. I think little old IsoEnergy is actually the 5th biggest explorer in terms of budget globally this year, which is an interesting situation. Yeah. Is everything, but that's a sort of bit of a guide, if you like.
Okay. One other question involving how many pounds of uranium that is tradable, and if Cameco can even get all the pounds that they need to cover. This is, again, a Cameco question, but do you have any insights on this?
Sure. Look, we know, based, and I think we'll all be, listening with open ears on Friday when they have their quarterly call to see where they're at. But certainly our understanding is that they've run their internal inventories down to the very lowest level that they possibly can. I suppose we suspect that Kazatomprom have had a few a bit more inventory that they've been putting out into the market in recent times. And then, of course, people talk about this mythical stockpile, these mythical stockpiles. We don't know where they are. Certainly the stuff that Japan's acquired over the past 7 years, most of that isn't fungible. It's in downstream products that can't come back into the uranium or the U308 market. So look, I guess we'll know where we stand on those fungible, tradable stockpiles in the next couple of months. And if they are as low as we suspect they are, then, we could be in a very, very much higher price environment.
Okay. Now, do you see the uranium price as being the main driver behind ISO, or do you think that it will be the continued drilling success, building out a resource?
Look, I think, if you look at us compared to most of our sort of peer group, we've actually been performing relatively well. We're up, maybe 30% year on year. Most of our competitors are down sort of 50% or more in that same time frame. So to some extent, there has been a factoring in of, but not in a major way, these great holes and results we've had. but they haven't really been fully factored in yet, I don't think. So, you know, I think that
You think the share price should be higher because of these nice results. You can say it.
The share price should be high. But certainly, you know, the great thing about our share structure and that very tight share structure is that when we do put out results, the share price performs well. That's been nice to see. But also, you know, there is certainly an influence of the uranium price, and we've seen that in recent weeks, of course. So, you know, we're a rare opportunity in that we're leveraged, hinged to the uranium price, but we've got that extra kicker of when we put out good results or good news, our share price moves up disproportionately to others. So we're you know, double-barreled.
All right, Craig, last two questions dealing with some of the drilling. First and foremost, I know that you don't have all the drill plans underway, but how do you envision the balance between infill drilling and some of the step-out drilling looking to further extend the deposit?
Yeah, really good question. You know, for the time being, most of the drilling we will do will be, and certainly in the early stages of our follow-up program, we'll be stepping out to try and define the limits of the deposit so that we can better then work out how to optimally go back in and infill drill to define the resource. But so, and then, you know, there's really three components. So step out drilling to define the margins of the deposit as it is, infill drilling to then optimize what would get us to a maiden resource stage and get us to measured and indicated resources as quickly as possible. And then the third component, of course, is exploration drilling along that very prospective Larocque East structural corridor. And, you know, that's what we did over winter. We had one rig out there testing some of those targets out there. So, you know, three component program. As I say, we'd love to have 4 rigs out there, but unfortunately, because of the current circumstance, we can't do that. But we'll be doing, you know, we'll be drilling and exploring as aggressively.
Okay. Do you envision drilling any of the other projects that IsoEnergy has, or is the sole focus here Larocque East and the Hurricane?
Sole focus for the time being. Look, we've got a little bit of assessment credit type driven work on some of the other properties we've got, so we'll do that judiciously and at a minimal level to keep those properties in good standing. But, you know, certainly for the time being, the best bang for our investor dollar is to put it into Hurricane itself and some of those other exploration targets we've got in that zone. You know, at some point, I think we'll you know, be better funded and be able to go back to properties like Geiger, which was our flagship property until we discovered Hurricane, you know, get in and test some of those targets. And there's another little point there that I think, in addition to a lot of institutional investor interest returning to the sector, we're also seeing a number of other companies. We've been approached in the last couple of weeks by several companies wanting to buy properties off us. So we're starting to see everyone come back to the sector. So it's great to see. It's
okay. Everybody, thank you for tuning in. Thank you for all your questions. Craig, I appreciate you taking the time, updating everybody, and addressing all those questions that came in. If I haven't gotten to any of those, I will be following up with Craig on an interview that will happen on our website, kereport.com. Keep those questions coming to me. I can be reached on email at fleck@kereport.com. Some of the emails that you guys have been getting, updating you on the webinar, that should have my email address on there as well. And everyone who has signed up will have first access to the recording. So re-listen to it. If we didn't hit on any of your points, again, just email me personally. Craig, I appreciate your time today. Thank you.
Thanks, Corey, and thank you for everyone who's tuned in.